The European economy showed signs of rebounding from the impact of the COVID-19 pandemic, as the UK's gross domestic product or GDP growth accelerating in April to 2.3% month-over-month, its fastest increase since July. Germany's economy is also recovering from its pandemic-driven decline, with the Bundesbank raising its GDP outlook to 3.7% this year, 5.2% in 2022 and 1.7% in 2023, while it also pushed inflation forecasts up but minimized the importance of the surge due mainly to energy prices and tax impacts. Oil prices advanced on Monday to trade close to multi-year highs, finding support in better demand outlook as more COVID-19 vaccinations drive global travel near normalcy. The US West Texas Intermediate or WTI crude oil futures were up 0.8% to $71.47 per barrel, marking its highest since October 2018, while Brent crude oil futures added 1% to $73.38 per barrel, about its peak since May 2019. Bitcoin climbed past the $40,000 mark for the first time since last month, as Tesla chief executive Elon Musk said the company could start accepting the cryptocurrency as payment once again in the future. The world's largest cryptocurrency by market capitalization rose 3% to $40,182, recovering and leaving its recent range after falling from a record high of nearly $65,000 in April. UK inflation grew past the Bank of England's or BoE's 2% target to 2.1% in May, and is expected to increase to 2.5% by the end of 2021, as the country reopens after COVID-19 lockdowns and global oil prices edged higher. Still, the Office for National Statistics or ONS reported that the UK's Consumer Price Index or CPI was up 2.0% in the 12 months to May, with Bank of England Governor Andrew Bailey and most colleagues saying the inflation rise will be short-lived and cutting the large stimulus programs won't be needed. The US dollar reached a two-month high on Thursday after the Federal Reserve took a hawkish turn, signaling a much earlier increase in interest rates, with at least 2 rate hikes expected in 2023. The dollar index climbed as high as $91.484 for the first time since April 2019, having gained 1% overnight to register its largest surge since March 2020, while the Fed's move also supported the 10-year US Treasury bond yields, climbing to its highest since early March.